Welcome, Elisa. How are you today?
Hi, I'm good. Thank you so much for having me.
Of course. Hey, Elisa, do you mind telling us what do you do?
Yeah, of course. I am a co-owner of a real estate company here in Oklahoma City, and the quickest way of kind of knowing what we do is we help people who live not in Oklahoma City buy real estate.
How did you get started with real estate?
So I got started, I guess it's been 6 or 7 years ago now. I was in college at the time and thought that I wanted to be a doctor.
Oh,
And
wow.
yeah, so I was in school to do that and ended up dropping out because I decided I didn't want to be a doctor. So I spent quite a bit of time in the library just trying to read a bunch of books and find something that struck. So I ended up reading Rich Dad Poor Dad. I'm sure you've
Of
read
course.
that.
That's where
You
I
know,
start.
kind of.
Almost everyone starts at Rich Dad Poor Dad.
Oh, I'm sure just about everybody who's listening has read that book at some point. And
Yeah.
so I got done with that book and a couple other of his books, and was like, you know what, I think I can do this. So I got my real estate license and initially got into sales. And at first, I was working with owner occupants, and that was super fun, but I very, very quickly gravitated towards investing myself and working with investors. And, it just kind of all snowballed and built from there.
That is very interesting. So, how did the transition work out for you from studying for medical school to real estate?
Man, it was honestly a pretty tough transition with when you're going to be a doctor, so much of it just has to do with knowing the numbers and studying, and if you know the material, you're going to do a good job. Um, and then with real estate, so much more of it has to do really with your ability to talk to people and work with them and negotiate and hunt for the deal. So it's fun. It took me a little while to kind of make that shift because the skill set to succeed in each area are just so different from one another.
And from investing for yourself to becoming entrepreneur or business owner, how did
Yeah.
that happen? And why did you choose to become a business owner or entrepreneur?
Yeah. I still don't know why I decided to start a business. Some days I wonder if maybe I should have just been a doctor. No, but I bought my husband and I bought our first rental, and we just did a house hack, so you'd live in it and fix it up and rent the other half out.
Right.
We still own that one. It was a good little buy. And honestly, it all happened. I was one of those people that I guess got kind of lucky. It all happened very, very organically. I helped a couple guys buy some houses, and then I helped them do the project management and all of that locally for a couple years. And then, they'd refer me to some of their friends, who'd refer me to some more of their friends. And after a while of just doing it for local investors, I learned that there's actually this whole community of people online who want to do that. But, in LA and New York and Seattle and these other markets, it's just so tough for them to do it. So I kind of just became a business owner more out of the need for somebody to do this in our market more than and then the business and kind of the principles that go with that followed. I didn't really wake up and decide to start a business. I just woke up and wanted to help investors, and it kind of turned into one.
Very interesting. So, can you provide one golden nugget or a tool you use pretty much every
Yeah.
day, or if someone is aspiring to become an entrepreneur or business owner, if you can share some
Yeah.
experience?
Yeah. I think the two things that I've done pretty well. I, I wish that I would have paid attention to my network and the people that I had around me a little bit sooner. Because so much, I mean, whether you just want to be an investor to buy houses, or you want to build a company, or you want to build a bunch of companies, so much of what you're going to do comes down to who you know and how you treat people. And so, really, 90% of probably my very modest success comes back to the relationships that I have. And then beyond that, we are really, really big believers in just being really, really resourceful. So other than leveraged assets that we have for real estate, we operate personally and as a business totally debt free. And it's allowed us to be really, really flexible whenever, the other people are hurting or the market's shifting and everybody else is really scared. We've been able to really be flexible and take advantage of opportunities. And it's just because we knew the right people to bring us the deals, and then we were in the right financial position once the deals hit our desk.
Right, and that's a great point. Real estate is all about relationship and networking, right? Also, yeah, we want to develop long-term relationship, right? That's the whole point. No one wants to fly by.
Well, and it's like you want to get the deal done, but I see so many investors, especially newer investors, they don't pay attention to their reputation. They don't pay attention to, the long term, what happens after this deal is over. So they may burn through a relationship because they don't want to dip into their pocket and spend $2,000 to fix a mistake, but it ends up costing them 5, 6, 7 deals down the road that would have kept coming to them if they'd just done the right thing.
All right. No, that's a great point. So, and you mentioned about OKC market. So that's Oklahoma City, right?
Yes.
So why OKC market, and why haven't I heard about it? Because of course I've been picking a lot of markets, and I've heard about Memphis and Indy and Kansas City, Missouri, Atlanta, but I didn't hear about any Oklahoma market. And I know OKC and Tulsa are two of the biggest markets there, but somehow I haven't heard, or I haven't.
A lot of people haven't. A lot of people haven't heard of Oklahoma City. A lot of people kind of compare it to Indy before Indy became Indy.
Oh, okay. That's a good analogy.
I don't know how accurate that is, but I've had 7 or 8 people say that to me. So for whatever that's worth, we are just like pretty much every other market in the Midwest. We are slow and steady. We only see about 3% appreciation every year. Forbes deemed us recession proof. In the last recession, we dropped about 6.5%.
That's not bad.
No, it's really not. I mean, compared to like Vegas, they really, really got hurt.
Vegas, and I'm in San Francisco Bay Area, so entire California, or if you look at Phoenix, slammed.
Man, they get hurt really bad. So, we don't get the fun ride up that you guys get on the coast, but we also don't have that bottoming out. I get asked a whole lot about oil and gas, and when oil and gas tanks, if that hurts us. The short answer is really no. Oil and gas are really actually not even in our top 4 or 5 employers, and we're pretty diverse. Yeah. That always surprises people. But oil and gas is, energy is a big part of our market, but it's not the biggest, not as much as people think. Not like West Texas.
I always thought of it as Devon Energy and Schlumberger and all of that Chesapeake as well, right? So
those are all they're all out here. They're just not the biggest. And then if anybody wants to jump on a call, I've got a really long, boring answer about why. But basically, oil and gas typically works in tandem with the rest of the market. So when oil and gas is performing, the rest of the market isn't, and vice versa. So typically, a part of our market performs well, and it keeps us stable. Is the short answer. I always get asked about tornadoes. People really, really get concerned. Tornadoes actually are not really a huge deal. It's mostly just the hail that comes with the tornadoes, and insurance covers that. So, I mean, all in all, Oklahoma City it's safe. And I think that's why a lot of investors like it, especially with not really knowing what the market's going to do over the next couple of years. Interest rates have kind of been a conversation topic. People don't quite know what's going to happen there. And then we're due for a market correction. And so I think people are just ready for a safe bet. And since Oklahoma City, people haven't really heard of it, they kind of assume that, they did okay in the last recession, and hopefully not too many people have heard about it. It's going to stay a safe bet.
So you mentioned tornado, and that reminds me, when I was visiting OKC, someone told me, "Oh, we get a lot of quacknado," And I was like, what is that? And they said, we get earthquake and tornadoes. Uh,
Yeah.
so most of these policies are written with tornadoes in mind, or you should also look into earthquake insurance, or how does that work?
No, so insurance is pretty straightforward. It's going to cover any tornado damage just as is. You don't have to have a separate policy for it.
Oh, okay.
Earthquakes, I think anybody who lives in California would probably laugh at what we call an earthquake. So, and it's only in this pretty isolated part of Northeast Oklahoma City of our metro. So most of the areas that we're selling in, you don't feel earthquakes. And even when you do, they're really, really small. So some people do go ahead and pull out an insurance policy. I personally don't have one on any of my properties.
Okay, no, it makes sense. So what else is going for OKC market? I understood that it did not during recession. It didn't go down as much, like 6.5%. And of course, it's not a one-trick pony like, as you said, West Texas, where it's all dependent on oil.
Yep.
So what are the other employers, or what's the job market like?
Yeah, so the job market is kind of like I was saying earlier, it's not, so oil and gas is a pretty big part of it, but it's not the biggest. Education is actually a pretty big part of our employer. We've got several bigger universities. Tinker Air Force Base is one of the biggest Air Force bases in the country, and it's just on the east side of our metro. And then I always try to give a couple company names that people have maybe heard of that are headquartered here. So we've got Hobby Lobby is here.
Oh, okay.
Yeah, Boeing has a private sector out here. AT&T has a big headquarters here. Sonic, I don't know if they have that on the West Coast, but Sonic is headquartered here. Dell, Hertz, Love's, the big travel, like the gas stations that you see when you're doing a road trip. Those are all, so oil and gas is up there, but honestly, those bigger companies that have headquarters here kind of take up a bigger bulk of the job market. And they're so diverse from, transportation to oil and gas, and then medical research to the Air Force, that since it's all kind of in these different little sectors of the market, even if one part of the market gets hit, it kind of just gets absorbed into the rest of it. So that's where you see we maybe go up and down maybe 3% every year, but it's usually not, you really don't feel it. If you do appreciate, it's just enough to keep up with your taxes and insurance going up. It's not really enough for you to notice it in your pocket, honestly. Taxes, oh, go ahead.
No, go ahead. Continue. Yeah.
I always get asked about taxes. I'm not a CPA, so I always get a little nervous to answer those questions. Corporate income tax is about 6%. Employment tax is about 8%. Typically, when you're paying taxes on your house, it averages out to about 1% of your purchase price. So it's not crazy low and it's not crazy high, but really kind of everything in Oklahoma City is pretty steady. So job market, of course, that's important, but it's not just the job market. Really, everything is.
And does OKC being in close proximity to Dallas help?
I've never actually gotten that question. I don't know. We don't do a whole lot of business in Dallas, and Dallas is actually kind of a weird market. They're more of a hybrid market, I guess. And so they've got these little pockets like in Dallas and Frisco and a couple others that just get crazy appreciation, and really that hasn't happened there before. So I'm kind of curious to see what's going to happen next time the market corrects, because I think it'll be kind of their first run having a market like this.
Yeah, so they never had like crazy appreciation like this, which they have been having for the last 5 years.
And I think the people are still investing there because they haven't experienced a bottoming out like the coastal states have. And I don't even know if they will. It'll just be interesting to watch.
Yeah, I'm looking forward to it as well.
Yeah. I know. I hate to say that because I know that it's not going to be good for everybody, but it's like I said earlier, when we're in the position to kind of take advantage when the deals show up. So hopefully more deals.
Yeah, exactly. Even if when market is going up, it's good. If it's going down, it's still good, right? So
Yeah,
you have to be
exactly.
just prepared to take advantage of it, right? And then if you are a buy
Mhm.
and hold investor and you are getting the rent every month, it doesn't matter if it's going up or down.
Yeah, exactly. And that's right, especially like Oklahoma City, our like the landmass of our city is so big. I get when people fly in to meet with us, they always comment on that. Like landmass wise, we're one of the biggest cities in the country.
Oh, is it?
Um, so yeah, and so I didn't realize that until I started traveling quite a bit, how different it really is. So it's really, I mean, every market you want to be hyper local and really know where you're buying and what you're buying, but especially in Oklahoma City, you can go from A class to C class in about 5 blocks pretty quickly if you don't really understand kind of what pocket of the city you're buying in. Um, so a lot of being successful here is really having a pretty in-depth understanding of what pockets of the city are going to deliver what.
That's interesting. So let's talk about your business. So what
Yeah,
does your business do? Table Investments.
yeah. So we are basically a resource for people who live out of state to invest here in Oklahoma City. Um, we we're not romantic about any one particular type of property. So we will sell turnkey properties, meaning we buy it, we flip it, we rent it out, sell it to you, and it's got warranties in place. We will also sell you a distressed property and help with the project management. We are not tied to a certain type of property or a certain part of town. We're more so tied to making sure that whatever investor we're working with, that we understand what their investment strategy is and making sure that they're buying something to fit that strategy. Um,
So
so
you
it, a lot of, go ahead.
What you are saying is that you are not just a turnkey provider. So you
No,
can have turnkey properties as well as you may find a distressed property and help the investors in rehabbing and renting out
yep.
the property. Okay. Yeah, and go
And
ahead.
really, in our market, the best deal that you're going to get is by going to a property that's been a rental for a while. So it's been in good condition, it's been maintained well by a management team, and you already have a tenant in there. Because the guy who currently owns it, his only option for selling that is to put it on the MLS and bug his tenant and potentially deal with his tenant moving out, and they don't want to do that. So
Right.
they'll come to us and we'll agree to sell it to them or sell the property for them, but we tell them like, hey, you've got to give stronger equity or better cash flow. And they're willing to do that for the convenience of the sale. So it puts our buyers in a better position because they're able to get a property that's cash flowing from day one with a good tenant, just like a turnkey property, but you've got more equity, like you're buying an off market or a wholesale deal. And we really like kind of that hybrid spot in the middle. I know a lot of people want to do the BRRRR method right now, but because so many people are doing it, the market is just too competitive for the most part. I mean, the deals are out there, but in our market, it's just so competitive that it's almost impossible to get a good deal. But if you can get creative and find equity through negotiation instead of through rehab, you can usually get the same exact result. And plus, I mean, I get a whole pedestal I get on about this, but you're in a better position for when the market does start to correct because you have these properties that have cash flow. You've shown the bank that you have a strong asset, and they're typically willing to be more flexible and letting you borrow against it to buy more assets once the deals do start coming through. So we just love helping people get investment deals, kind of whatever that looks like for the particular deal.
So, and I want to explain the BRRRR method to my listeners as well. I know you just brought it
Of
up.
course.
So, yeah, BRRRR means buy, rehab, refinance, repeat. So the idea is
Yep.
that you buy a property on your own, a distressed property, uh, on most of the time on cash or hard money lending, and then you rehab it fully, you rent it out. That's the second R, and then because you already bought the property at pretty good price, you rehabbed it, you rented it out, and now you can go to a bank and refinance it at a much higher valuation. So if you bought, let's say, if you bought for an example, a 70,000 property, and now valuation comes to 100 grand, you are able to pocket the difference. So pretty much you will have no money in the deal. But as Elisa mentioned, it's hard to find those per deal right now. And also people just start picking up the buzzword, right? For, oh, I want to do this, not knowing how much involvement it needs, right? So I have done one bar and it worked out. If there is another deal, I would do it. But I'm not always just looking for bar, right? If it falls on my laps, yeah, that's great. But I'm not always just looking for bar deals.
Yeah, and I love those deals. I've done, I don't know, one or two of them, and they can be good. I see so many investors who aren't jumping at deals that are really good because they're holding out for one investment type. And so they'll end up going 2, 3. I had one guy 4 years without investing at all because he's caught up on that one strategy. Versus if we can go into a deal, like we've got my business partner and I have one under contract right now that, it's worth, I think 48,000 is what it appraised for. And we've got it for, I think it's under contract at 41. So it's not quite even 20% equity, but if we just get in at a good position, I'm liquid if I need to sell it quickly.
Right.
It's cash flowing at like $700 a month. So strong tenant, strong cash flow, everything was good. I can't have, the badge of honor that says I got into it with zero money down.
Right. Oh, that's great. Hey, Elisa, let's take a quick break.
Okay.
Welcome back, everyone. I'm chatting with Elisa of Table Investments, and we are discussing about Oklahoma City market. Hey, Elisa, you mentioned about how your business works, but what kind of a return investors should anticipate in this market, right? Or what have you seen so far from cap rate perspective or NOI? If you can, shed some light.
Sure. Cap rate is, I like to talk about that just because it's easy and pretty universal. For the most part, you're going to see about 8 to 8.5%. If you've got a property in a rough area or the conditions rough, we can typically boost that up to somewhere between 9 and 10%. Right. If you're in an A-class area, that's really, really good with, low risk tenant profile, typically closer to 7.2, 7.5% on cap rate. But if you just average property, you're typically looking at about 8.5% cap rate.
Okay. And what's the range of purchase price on these properties? Do they start from, you mentioned 40, 45 to 150, or what's the range?
My favorite price point, if I can stay between about $75,000 and $95,000, that's my favorite. The $40,000 price house that I'm buying it's a rough area.
It would be,
so I don't typically love that, but $75,000 to $95,000 is a really good area, good tenant. You're not going to have a lot of headaches.
Yeah, and it's a great price point that you mentioned, because I always recommend my listeners that do not buy anything below 75 grand. Somehow,
good. Okay.
I have burned my hands before about 5 years ago, so I know I have learned that lesson. And so if you are doing this out of state, it makes sense to stay in C or above market and do not go below C minus or D, right? And 75 is pretty much the range in almost every market. Of course, not the West Coast market where you can't buy anything for less than 500, but at least in most of these markets, even if you mentioned Indy or Kansas City, same things, you can find a decent house for 75 to 80 grand. You should be able to refinance. That's another advantage, right? If you have to buy cash, because most of the banks will not write a loan for less than 50 grand. So if you bought a property for 75 or 80, you can put 25% down and you are able to get a loan over 50 grand.
Yep, that's spot on. We totally agree with all that.
And so let's say a property is worth 80 grand in a C neighborhood. What kind of property would that be? What condition and what kind of rent it would entail?
So if you're buying it for about $80,000, it's probably going to rent for about $825,000 to $850,000.
Okay.
And the easiest way that I always break it down, so there's C class, that's just kind of working class, blue collar. It's safe. It's just lower income. Right. And then there's C minus class that is like that $40,000 house that I'm buying that is somebody was shot literally in the front yard a couple months ago.
Yeah.
So for our out of state, I don't mind buying scary houses, but for our out of state guys, I like to sell blue collar, working class, safe C class. So those are going to be like 3-bed, 2-bath, maybe a 1 or 2 car garage, brick or vinyl exterior, good tenant, good credit score. They're lower income. And they pay on time. A lot of times they'll stay for 2 or 3 years, so you don't have a lot of vacancy. Those are probably my favorite ones. And we're typically able to get about 5 to 15% equity in those deals. So not a ton, but it puts the out-of-state investor in a good position if their situation does change and they do need to liquidate quickly in the future.
Okay, perfect. Now, this was very helpful. Thank you so much. How can my
listeners? I'm so glad.
Yeah, how can my listeners reach out to you?
So a couple ways. You can either email us at hello@table.investments, or we are on Instagram as Table Property Network. And either one of those is great.
Okay, and I would put the website address as well on the show notes. So
yeah, please do.
To reach out. Okay, and I appreciate your time, Alyssa. Thank you.
Of course, I appreciate it. Thank you.